In today's video, we will be going over market structure. It'll help you with your bias and overall confluences when it comes down to entering the trade. So market structure plays out on all time frames. The higher the time frame, the bigger the play or the bigger the trend will be. So in these examples today, we'll be going over perfect structure, messed up structure, and broken structure. Those will be the three key identifiers we'll go over. Now I'll keep it simple and draw it out on the screen. And if I have time, we'll go over some examples on the charts. I might have to break this up in two parts. So on an uptrend, market makes higher highs and higher lows. I'm going to draw an uptrend. So this is a perfect uptrend here. Now, starting from the bottom, the first highest point is going to be called a higher high. And then when the market retraces or dips, this is going to be called a higher low, meaning this is higher than this previous point here. So we're going up on the uptrend and made a higher high at this point, and then it dipped a little bit, but a higher low. Then we come back up. This made another higher high, and then this one's going to be a higher low. All right, so then up here again, we have a higher high, and then another higher low, then higher high, and higher low. So as we notice here, trend is steadily going up at a good pace, making new higher highs and higher lows. So we know this is a solid uptrend. Now what I'm going to do is a downtrend. And so we'll do the downtrend the same way. Price drop in here. This one's an uptrend, so say uptrend. Uptrend. And then we'll just put DT for downtrend. So on a downtrend, we're making lower lows and lower highs. Lower lows, lower highs. Lower lows, lower highs. The opposite of what we just seen on the uptrend. So this trend is going down, and we notice that this part is lower than the previous. So this is going to be a lower low, but we have the push up that creates the lower high right here. All right, then we got another drop that makes a lower low here, which is lower than the previous lower low. Trend bounces back up on a retracement and makes another lower high here. Got another dip here, so it makes a lower low here. We have retracement coming back up and makes another lower high here. Another lower and another lower low coming down here. Now, if you notice, if we draw these lines straight over, notice how once it makes a lower high, the lower low gets broken. So it breaks past that previous lower low right here. Like I said, here, this comes down, makes a stopping point, starts chopping to a lower high, and then it starts getting choppy here, and then it takes out the next lower low. And that is what you want to see on a downtrend. You want to see the lower lows get broken for the trend to stay valid. Just like if we drew the lines over here at the highs that it was creating, now the highs are getting taken out, are getting blown past. All right, so we look left and we see the higher high, the high is getting broken. We look left here, we see the high just got broken here. So we're just drawing a straight line over at where the highest point is. And then it gets a dip here for a higher low, and then the higher high gets broken to create a new higher high. Over here, creating new lows. So new low gets created, bounces up, new low gets created, taking out this low. It has to break to recreate on to make a new lower low. If we're going on a downtrend, it has to keep making lower lows. If it's not making new lower lows, then it's either going to do one or two things. It's going to get choppy and go sideways, or it's going to go the opposite way. Meaning, if it comes down here, comes back up, and plays around here, doesn't take out this lower low here, then it's going to keep going sideways only, or it's going to shoot back up if it doesn't create a new lower low. If it doesn't do this and take this out, it's not a downtrend no more. It's got to create new lower lows. Lower low. All right, lower high. So we're seeing that perfect structure, new higher highs being created, new lower lows, and then new lower lows and new lower highs being created. So now let's go over a messed up structure scenario. This is what you'll see perfect structure on there, but as we know in the market, it's not always making that perfect structure. Likes to play around a lot before showing its hand. So now we're going to uptrend, right? And what we have here, higher high, higher low, higher high. Now this is where it gets a little funky. You're like, what's going on? So now we have higher highs. We had a higher high here being created. Price just tanks. But if we notice, price didn't take out that higher low right here. And then down here, it got a little choppy and messed around before it finally just took off and broke this higher high to higher low, but it didn't take out this higher low. That means structure still good. Perfect scenario, remember we went here. But in market, you'll see a lot of messed up structure. So they'll play around in here in this area and get creative. Because you see right here, this looked like a lower low, lower high, lower low, lower high. Then this lower high gets broken, and then it doesn't take this out. And then it starts going. But you still have this left side here. We're always looking to left side on market structure to see what price is doing. And you might want to write that down. That's the only way you're going to be able to tell and figure out market structure, is if you're looking to the left side of your chart. Since, like I said, this is a messed up structure, they're going to play around a little bit in between these higher highs and higher lows to induce traders to take positions the wrong way. Once they have enough people caught in the money going the wrong way, that's when they continue as planned. Make new higher highs, higher lows, higher highs. Ooh, look at that. It broke the higher low. But we're looking to left side, right? So as long as it's still creating new higher highs and not taking all these out, taking all these structure points out, trend is still good. Okay. Still create new higher highs and higher lows. Like I said, this is what you're going to typically see. This type of structure, messed up structure. They're going to show you the perfect structure. And when you see it, you're going to, oh, okay, wait for a new higher low. Wait for it to reject there. Catch me a little the next higher high. Now, let's go over the same thing on a downtrend. So we see clear as day, the lower low here being created. And this is why I like to draw like the little lines. And you'll even see me do that on my chart sometime as well. I'll put like, it'll be the same thing as the rectangles. You see the rectangles that's highlighted in. That's what I'm doing. I'm looking at market structure. I'm reading the charts. This is where your art skills come out on the screen. You know what I'm saying? Drawing your picture. And this is why I do this. I'm looking like, hey, is structure playing out? How is structure playing? Is it going to the downtrend still? Is it creating new solid higher highs, higher lows? Is it taking out the lower lows or the lower highs? So this is what I'm seeing when I'm doing that. So I got lower low here, lower high, new lower low being created. Then it got choppy up here to make a lower high. And this is what you'll see. You'll see it play around, create those triple tops or M formations. And then we get price to slam. Bam, lower low. Lower high. Slams again, takes this out. Okay, now here's where it gets interesting, because now, boom, price gets taken out here on this lower high, comes all the way back up here. The market maker's job, the number one job, is to induce traders to take a position. So if they are wanting to continue to go down overall, just like over here, they want to continue going up. They still have to show people that they might possibly want to go down now. There's a lot of people that's gotten these trades right. You know, a lot of people's gotten in, noticed that, hey, it's a downtrend overall. So people are hopping in with them, with the market makers. All these orders are getting, people are jumping in. Sell, 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 texting people, sell, sell. People in other Discord, sell, sell so and so. It's a downtrend. Market makers want to continue to go down. They got to be like, okay, we got to pump the brakes. Everybody's selling now. We can't all be selling. We got to make money here. They got to make money somewhere. They're not just putting money in just to put money in. They're putting money in to take our money. Okay, so they pump the brakes here. They caught on to us. Let's go ahead and retrace, bring it back all the way, get them to think we're going up. So we'll take out this structure here. We'll take out some lower lows here, dip all the way back up here. People got stop losses up here from people that are selling right here. They put their stop loss up here. So let's go clean them up, get that money real quick, clean them up, get that money. And then let's play around right here and then shoot back up a little bit. Then let's kill it all and make a new lower low. So this is what you'll typically see. You'll see them induce, 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 then take it back. Like, psych, nah, wait a minute, hold up. We got to pump the brakes a little bit. And then they'll come right back again to finish out structure. If they didn't want to take out this lower low, they would have came right back down here and chopped and then went back up. Like I said, the higher the time frame, the stronger the trend will be. So when you're looking at market structure, you want to be looking at this on the H1 and H4 time frame. You want to get the overall market trend first. Hey, what's the market doing? Let me look at H1, H4. I'll let you know. Let me see what market's doing. Let me see what market structure's doing. It'll tell you. Right. And now the third one is going to be broken structure. In this example, let's draw it out. Higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. All right, so we see a perfect uptrend going up here. So that's what the red line is. Now, all of a sudden, we see price just get taken out on that higher low over here to the left side. So we notice, man, price is slammed here, came back up, and then did not want to come back up to the top side. And then just started slamming, taking out these higher lows. What's going on here? Like, what in the world? It was just an uptrend. Oh, wait a minute. Trend, oh, structure got broken here. And then what they do? Oh, they retested here. They made a lower low here, and then a lower high, lower low, lower high. Taking out what? Left side structure. So that's an example of a broken structure. So we had clean market structure, price stepping up, nice and clean, higher highs, higher lows. We see structure get taken out over here on this higher low. Then they come back up and they fail to make another higher high and continue to take out lows, higher lows here to the left side. So this is what you'll see when structure gets broken and it starts a new trend.